How are you all doing? Morning, Wednesday. Halfway through the week. Always good. How is everybody this morning? All good? Morning, Leshy, Chucks, JC, Church, Vitali, Franco, Yusuf. How are we doing? Happy Wednesday. So, today is, wrong page, CPI for the Aussie this morning, and that's it. Nothing. Dead day. So there's no news to look forward to today. So opportunity-wise for movement, it's just normal price action. The Aussies came out at target within... Go away. Do not want to buy your silly pen, Pro. The Aussies came out with targeted CPI. So where they thought it was going to be, which isn't good. Well, it is good in a way because it's come down 0.7. 5, 6, 7, 8.8, which obviously is why they kept the interest rates the same yesterday, because it's still too high. But it is on its way to target, which is good. So the market this morning, if you look at the ADR dash, is flat. There is no movement at all on the market today with the Aussies. We got a little bit of a kind of whipsaw reaction. That's a 4-hour chart. Let's look at the hourly chart. Got a little bit of a whipsaw reaction on the news, but not really much at all. So no news really there for the Aussies, and that was our only news event today. So dead. So new home sales this afternoon, and we got crude. That's it. So really today, it's about market's reaction to what we've had this week and whether or not they're going to continue the moves they put in off the back of these PMIs. And the PMIs were negative for everybody this week, really bad. And obviously the rates there. So it's a bit of a tricky day today. It's either going to be a reversal day or a continuation. So if you look at where we are for the week, the pound US dollar has been the strongest mover this week. We're all the way up here. And there's a reversal just gone in now. Beautiful M pattern. So potentially a good looking short forming there. New Zealand dollar, US dollar is also extended on the weekly. I took an entry on that yesterday here. So in one on that, it pushed up a little bit further this morning and is coming back down, looking to target back down to origin. So that was an ADR reversal trade that I took yesterday. That was a big extension on ADR. We did 82 off of 60. So that was an ADR hit. You can see why I got in. There was lovely rejection up here. And then it just popped after that 2-hour wall we hit. So in one short on that. That was also an H1 extension, almost at the 80, not quite, but it was pretty good. And US dollar CAD, I also got into this yesterday. So this is a weekly extension. So where are we? Tuesday, Monday. That's Monday. So we pushed up, big drop, pull back, another big drop. So two ADRs back to back there. H1 extension, but I got in because it's an H4 extension. Excuse me. And the other thing I like about this one is we're back down at this support. So I took it there in anticipation of a bounce off support. This morning we've broken straight through it, or rather yesterday. Excuse me, my voice is going this morning for some reason. So yeah, yesterday towards the end of the day, we just broke through it. It is starting to retrace a little bit here. So I'm hoping we get a push back up on that one today. So just first entry on that US dollar CAD. The US dollar CAD, obviously, you can see every trade I've taken on the US dollar CAD has required a number of positions. That was that anomaly. So may come back. It is a back-to-back ADR, so it's got a good chance. It's very, very stretched. Got down very, very quick. But it may be the usual kind of weak hold type thing. So swing trade as usual. Position trading is swing trading. So looking to come back up into there. So those are your weeklies. So good opportunities on those. So I'm in the New Zealand dollar, US dollar, and the US dollar CAD. Pound US dollar, I haven't got into, but that is also a good one. So I've got my exposure on the US with the other pairs rather than taking the pound US, but that's a lovely looking rally. Look at it. It's gorgeous push. So that move there, we had a 38 retracement on, and then this move here, we kind of had a little 38 retracement in there as well. So it's flag break after flag break. So it means that since this move was initiated, we haven't had a profit take pullback on it, and that looks like what we're getting right now. So really good looking short opportunity. Where it's going to go, obviously you've got targets on the chart there. Very obvious. So good opportunity there on the pound US. So those are your ADRs and your weeklies. Everything else monthly we've already looked at is mainly yen. Extensions on RSI. US dollar CAD is still extended. That's the one that I got into yesterday. So that was an extension on the 4 hour and on the hourly. So that was really nicely extended. Same with the New Zealand dollar. Nicely extended on RSI. And the pound US dollar. So it's all the same stuff. Yeah. So big extensions, big pushes, looking for those retracement moves. New Zealand dollar CAD. That one is a little bit more messy. It is extended on the 4 hour, but only just. Oops. So it's just extended there, and it's kind of been really, really choppy. Look, this price action for the latter half of last week and the early part of this week, just total chop. So it's not one. It's it's not a nice clean push, which you'd expect a profit take from it. It's a kind of let's sit around, add more into it sort of position. It's not a great one. And Euro New Zealand. So that's a good potential double bottom going in on that one. You've got another monthly here as well. So it's a double monthly low. So you're going to find buying pressure at this area, which is coming through this morning. So again, lovely opportunity, Euro New Zealand for a long. I've got exposure on the Euro already. And New Zealand. So I'm kind of long Euro New Zealand anyway. So those are your ADRs and your RSIs. All done and dusted. Morning, everybody else. Virginia, Paul, Champagne, Yotco, FTNet. Thanks, everybody, for getting back to me about my recommendations for pricing for the premium or the private group yesterday. All one of you. I'm going to make my own price up. Seriously, one person got in touch. And do you know what they said? I don't know if they're in here now. Probably not. Because I think they watch the replays. Do you know what they priced me at? £150 to £200 a month. Yusuf. It's not going to be that much. Nowhere near. You've got to have a price point that isn't going to put everybody off, obviously. But I also want to not have too many people. So I'm not turning into one of those gurus that lives off of £200 a month. And like, yeah, if I got 20 people in at £200 a month, what's the point in trading? Yeah, I'm not going to be that man. Right. So those are ADRs and RSIs. Breaks today. Lovely clean break north on the FTSE. At the moment, it's running into a little bit of resistance up there. The DAX looks like it's going to hedge. I'm fast getting frustrated with SIH. I've looked back yesterday through the results of SIH, and I did some further back testing. And the reason I developed the SIH strategy from ORB was to get rid of the frustration of being constantly stopped out and whipped. I've looked at the strike rate of hedges, and in the last what did I do? 3 month or 6 month? I did multiple tests yesterday. I think I did a 3 month yesterday on the SIH. In the last 3 months, the hedge rate has been over 60%. So 60% of the days, it's hedged. The previous analysis that I did was less than 50% hedged. It was more like around about the 36 to 38% hedging. So in the last 6 months, the market has kind of shifted into last 3 months really, but has kind of shifted into a much more whippy open. And now this is frustrating me because I'm getting so many hedges. I am getting out of the vast majority of the hedges with a nice profit. But what seems to be happening to me anyway at the moment with the strategy is one pays for the other virtually every day, and it's you get the odd week every now and again where you get lots of clean breaks and you sit there and go, this thing is gold, and it makes 5 or 10 grand. Then you have weeks like this week so far, we're only on Wednesday, where seem to be battling. One pays the other, one pays the other, one pays the other. And it's just getting annoying. So I want to do some more testing on this. Is part of the stuff I'm going to be doing in the members group. Basically, I want to do a lot more testing on this strategy and the open of the indices, because I really want a strong, reliable strategy at the open, but it is so hit and miss. Indices are just so hit and miss. But this is scalping, isn't it? Scalping is hit and miss, which is why it's very hard to make money out of it. So, but the 3R breaks, like yesterday, we had a beautiful 3R yesterday on the NASDAQ, straight down, done and dusted. Yet I got hedged on the Dow. One pays for the other again. So it was a profitable day yesterday, but it wasn't enough. It's just not enough. But this is part of the discovery route with trading, is you try different strategies, and part of, I think, becoming successful and profitable is getting rid of strategies that annoy you, because if you're annoyed, it really plays on everything that you do as a trader. So I think you just got to sometimes admit defeat with strategies. They work. The edge is there long term. You put it in the back tester, it makes money. It's just when you see it, and this is the trouble with back testing, isn't it? You do a back test for 4 years and you see this equity curve go like that, and you're like, that's brilliant. But when you actually zoom into the equity curve and look at a month or another month and another month and another month, you see how frustrating it was to get that profit. So it's sort of, you've got to stick it on a VPS and not look at the thing, because it'll drive you nuts. But then I don't think that is the way to do it. You need to be seeing what's going on, don't you? So anyway, so we'll see if the FTSE gets to target today. Beautiful target today. 3R is pretty much that pre-market high, which is not real. But so the close yesterday was there, which is pretty much what we're coming up to now. So we need to watch this area, but we will see. Morning, Themba. Charge $500. Yeah. No. I don't want to be sitting there with one person. I think the most reasonable could be $25 a month. I was thinking, well, I'm doing it in pounds. I'm not doing it in dollars for a start. So you'll have to work out your own conversion rate. But I'm thinking somewhere in the region of the £35 to £40 a month mark. I think that's enough of a barrier to stop too many idiots, but not so much that most people can't afford it. I hate this. I hate saying it, but it is true. It's less than a cup of coffee a day. And that's kind of where I want to keep it. Yeah. Think of this like meeting me in a cafe and having a cup of coffee for an hour. Yeah. You're going to buy a coffee, aren't you? Let's keep it at that sort of price, not stupid money. Because at the end of the day, I need enough people in there to make it worth doing. But obviously, I want to get rid of. If you stick it down at like the $5 or $10 a month, you'll have people just coming in to troll and annoy. Yeah, it's got to be enough money so that you're not going to get people coming in just to be idiots. I've been in paid groups like this before, and you get idiots. And they're usually idiots with money as well. They're people that just don't give a monkeys. They're coming here to cause chaos. Some people will just want to watch the world burn. The problem with paid memberships is I don't think I can ban people. That might be a problem. So obviously these are things I will learn. Morning, Themba. Morning, Wayne. Morning, Wayne. Message retracted. What did you say? Adrian, 10 Aussie dollars. Yeah. Sarrel, $20 to $50. Yeah, see, this is what I'm thinking. I think that's a decent range. Champagne, €15. God, you guys are cheap. Am I not worth it? I think SIH, you have to wait until you're in a period of active stock buying and switch it on for a few weeks and then back to manual. Yeah, this is the thing, Thought Feeder. Again, I have a really good idea for a volume-based entry method in stocks, which is something I want to. I've got a list of stuff, but it's on my list. So instead of using time entries, as we do, so we know the open is here. Yeah, we know the open is there every day. I drew that in completely the wrong place, but we know that's the open, and we know we get volume coming in at the open. Yeah. So rather than picking a time of day to get in, like this is the open today. Look at that opening candle today on the DAX, right? That's the height of the candle today on the DAX. Look at the candles before it and the size of them. There's not a lot of difference, is there? So should we be trading the ORB today? No, because there's no volume. Yeah. So what I thought of was looking for a volume detection system so that instead of getting into every open, we only get into opens that are actually doing something. Yeah. And that is something obviously that you can detect using volume. And I know obviously volume here is not true volume, but all brokers will show a volume spike. So you can see the volume picks up here. Yeah, which is where the pre-market open is 7 a.m. That's when the Frankfurt exchange goes live, but the actual opening bell is there. So the volume picks up there, but if the volume, see that volume spike there is that big compared to that there. So until we see this come in, and not just come in, but be sustained, we're not going to trade that day. So there's different strategies you will trade on days where you've got light volume and heavy volume. So I want to try and build something that's a little bit more dynamic. And obviously I'll use the existing stuff to do it with, but speed. But yeah, just try and identify what type of day it is more, because the edge is definitely there and it's definitely profitable, but it's just trying to weed out the crap from it. And you need filtering systems, and this is what strategy development is all about, is filtering systems. You got something that's fairly decent, but it's got these problems where it keeps going wrong. Filter those problems out and you've got a beautiful equity curve. You're not curve fitting, you're just getting rid of the crap, aren't you? So but yeah, you know, this is a prime example. This is a perfect ORB SIH day. The FTSE today is great. So it's about identifying these days. Why are these days like that? Yeah, and putting in a risk-based system that does it, that, you know, sort of takes advantage of it. That's what it's all about. Less trades, more quality. You know, same as H4. You know, the entries that I'm getting into at the moment, H4 80/20s and H1 80/20s on the RSI. I'm getting in on 80/20s. They're better quality than 70/30s. I'd rather have less trades at high quality than be swamped with a load of crap going on, basically. It's a much better way of trading. Just going to take off half. We're just tapping 3R on the FTSE. So if I could select the trade, just closing one out. Second one is trailing. So locked in 197. We've got 299 hedge. It's currently sitting at 400. So it's a clear $100 so far. Pound, this account. So we'll see what happens with the hedge on the DAX. I think with SIH, yeah, just I'll answer that. Yeah, as Vitaly said, ORB is better than SIH in my opinion. Yeah. So I mean, this is it. It's individual. It's down to you. If you prefer the opening range breakout strategy, you trade that one. And that's the whole thing. I want to give people lots of ideas, lots of strategies, and provide the products that can execute them in the way that you want them executed. So variety is the spice of life, as they say, isn't it? I've purchased 5-year products. Big fan. Happy to pay on a one-off basis, but I don't like ongoing fees. I've spent thousands on courses. Enough is enough. Exactly. Yeah. I totally agree with you. Don't buy any more courses. I've got a video about buying courses. They're crap. I'm not doing courses. I know I would never do a paid course. Say that, but no, I wouldn't, because it's you're just recycling crap. A course is no good without somebody to explain and help. Yeah, whenever you get trained for something, if you look at a job, you go for a job somewhere, you get trained to do something. They don't give you a manual and go, there you go, you read it? Yeah, brilliant. Okay, get on with it. Do they? There's a guy that goes, got any questions? Yeah, I didn't get that bit of the manual. The bit about wearing a hard hat, what's that for? You're on a construction site, mate. It's in case bricks fall on your head. All right. He would have died if he'd gone to work without the man, yeah? And that's the same thing with a course. You can do a trading course. It gives you a load of information, but without someone standing over your shoulder going, why are you going to press that button? You're going to go wrong. And that's what I want. That's what I do, basically, isn't it? It's like, I've just found this amazing EA on gold. It's got an amazing equity curve. I'm just about to set it live on a 100 grand account. Wait a minute. You know that thing is going to blow the account and they're just showing you 2 months worth of profitable trading. Oh, that sort of thing. That's what you need. £70 is good. You say, I'll tell you what, you can all pay your own money, because I've got someone that wants to pay me 200, someone that wants to pay me 70, and the little ones, yeah, I'll take them. It's got to be a fixed price, and it's got to be cheap. I don't want it to be expensive. So it's around $50 a month. Yeah, I don't know what it is. That's not going to work, is it? That's not the website. Oh my God, I can't type this morning. $66. Oh, go away. Oh, I'm not doing it 50 pounds. Oh my God. Why can't you just use the internet anymore? Why does everything have to try and sell you something? $46. Something like that. I think that's a decent level in it. Because the higher the price, the more suspicious people will be in it. I think it also works the other way though, Yusuf. If something's really cheap, you don't see any value, do you? In it. If something's really expensive, you expect the world. If something's really cheap, you expect nothing. I think that's the way I look at it anyway. When I've been buying cars, I've bought a lot of Porsches in my lifetime. And when you see like a 911 for 35 grand, and then you see another one for 38, and then you see another one for 40, then you see one for 22, you're like, oh, what a bargain. It's not a bargain, is it? There's something wrong. And then you see another one for 68 and you go, why is that so expensive? That's the way I look at stuff. So if everything is around about something, you're right, don't you? But in this industry, you've got people charging 2.5 grand. You've got people charging like next to nothing. And it's impossible to pick what works and what doesn't, which is kind of why I like Wayne's just said, buying on a one-off is great. But being able to try something is, in my opinion, better. So let's say, for example, I had a product that was £500 and I use it every day and it makes an absolute fortune. Wouldn't you like to try it for a month for £25? And then if you actually go, yeah, he's right, buy it for 500. I hate the rental model. I'm not a fan of rental models. This is why I don't do any of my products on a rental basis. That drives me nuts. £25 a month for the rest of your life. Just give it to me. I want to use it. That is much better. But I agree with you. Part of the reason this stream isn't as watched as it should be is because of the perceived value of free or cheap stuff. Quite possibly, yeah. Quite possibly. And the fact that I don't market it, don't forget, AZ. Yeah, there's a big difference between YouTubers that market their channels and YouTubers that don't. I don't market this at all. You either stumble across me, word of mouth or something, that's it. I don't advertise. So if I did, I might start advertising. That might be something I consider, is chucking some money into marketing to try and generate more people that way. But DAX gapping up. Well, it's breaking up. You mean? Yeah. It's going worse. It's literally it's in the pre-market highs. Look. So we've got to get through there. But the FTSE, you're at 3R now. So nice, easy, clean break today. T2 from ET, which is 5R, is just stuck in the middle of yesterday's range, basically. So we'll see if we can get there. But that's a beautiful, clean break today. Absolutely beautiful. You know, this is what this strategy is all about. And this is what this strategy in backtesting showed the majority of the time. That's where the edge comes from. You know, this when I talk about finding edges, this is what an edge is. How many times do we have a clean break from the pre-market range and the opening range and it goes more than 2R? Over 50%. That's an edge. That's all you need. Keep it simple, yeah? If over time something does something more than 50% of the time and the reward is twice as much as the risk, you have an edge. Don't overcomplicate it. It's really simple. SIH, ORB, that is the edge. It's there, clear as day. But in between that edge, there's a hell of a lot of crap. And I just feel we're being fed so much crap at the open at the moment. Hopefully it's not the market changing the way it trades, which happens and you have to adapt. Strategies fail because the market changes the way it works and it just don't work anymore. Edges get ironed out, which is why you've got to constantly be looking for new edges. They do disappear. 4R, let me just have a quick look at where we could be going. So 480 on the FTSE, 300 on the DAX. If I can clear 200, which is pretty much where I am, that's morning done. This is going to exhaust at some point. So we've cleared yesterday's high. That's an old high. That's not yesterday's high. It just happens to coincide with this pre-market pop this morning. So we had a lot of selling coming in there yesterday evening. I think what I might do is just reduce the trailer on it. Actually, I might just put a manual trailer on it. It'd be easier. So I'm just sticking a manual trailer on it just to tighten it up, because I think this is coming down in a minute and I just want to lock in that profit to make sure the hedge is completely covered on the DAX. And if it continues to rally, brilliant, but it's going to struggle. It's 20 minutes straight up. Right. Marketing is a nightmare. People will come for 200% profit in a month because they compare what gurus are selling, which is crap. Yeah, but if it's not sold like that, I don't care. This is the thing. If I market a stream, it's not like marketing a product, is it? So again, I don't do any marketing really on my on anything I build. I build it for me, and I build it for people in here. So I don't do much marketing on anything. But if you're marketing a stream, which is basically advertising the fact that I give out information and guidance and my experience, why would you expect 200% profit if I never say it? Yeah, I'm very clear. 10 to 15% a month is where the vast majority of professional traders are. Yeah, not 200% a month. Go and see other people for that. It wouldn't be marketed as that. I'd have to build some marketing for the website and stuff. But Euro pound is pushing. Good. I've got an aggressive drawdown control position on that. Lovely. And we haven't looked at overnight news, have we? Overnight news, there isn't any. That's why I didn't look at it. I had a look at it this morning. There wasn't any. So therefore it went out of my mind. There is no overnight news. Nothing has happened overnight of any interest whatsoever, apart from obviously the CPI numbers. So there's no further escalation in the Middle East at the moment. I do get the feeling this is going to fizzle out. This conflict has been running for a long time. This is just an escalation in an existing conflict. So I don't think there's any reason, from what I've seen, that Europe or the West in general will get involved in that. Therefore, the safe haven runs potentially won't happen. So we'll see, though. But just got to be a little wary of Swiss franc intervention coming up. I do miss 1R, 2R, 3R lines on the opening range breakout EA. Did it have them? Can't remember. Is it possible to filter out the days when SIH will trade? Like, would I be able to configure SIH to trade only on a Wednesday? You can't at the moment, but there are ways to do that, yes. But you would have to demonstrate in backtesting an edge on a Wednesday. Wednesday is a day of the week. Yeah. I disproved day of the week theory long time ago. So the midweek reversal, yeah. Wednesday, bollocks. Sometimes it does, sometimes it doesn't. Yeah. There is no edge on a day of the week. With a day of the week, you've got 5. Okay, so the odds are 20% in a strategy. Yeah, so that's a massively high percentage chance of something being random. Yeah, whenever you're doing any back testing on anything, you have to look at the potential random factor, that by pure luck, that's what happened in the past. Yeah, so you could have a strategy where you only traded on a Wednesday, short if it had gone long for 2 days, and long if it had gone short for 2 days. I have tested this as well. Yeah, the strike rate on it is somewhere in the region of 45 to 60 to 55%. Yeah, it works half the time. But when you incorporate the 20% random factor into it, that it could just be pure blind luck over the test period of 2 years, that every Wednesday it just happened to give you that 65% edge. You remove that, saying, well, let's just assume it was luck. All of a sudden that edge has vanished. This is why when you forward test strategies that have an apparent edge in back testing, they do not work, because there is a percentage random chance that it's just blind luck, that what you've identified as an edge is just something that happened over that time period. So this is why robustness testing helps. If you do a test over 1 year and you find an edge with a 60% accuracy, and then you test it over another year and you find it has a 58% accuracy, that's brilliant. Now, if you test it over 5 years and it does not give you something like that, you know that it's just pure luck that that year it happened to be Wednesdays. That year it happened to be Wednesdays. Over those 3 years, it happened to be Tuesdays. So the edge vanishes, which is why long-term backtesting is so important. And out-of-sample backtesting is so important. You test your strategy and you develop your strategy over a period of time. You take the strategy that you've developed the edge on here, and you test it again over a completely different period of time that has never been seen by the strategy development. If it can replicate the results to a degree of accuracy within 10% variance, roughly, whatever you're happy with, it doesn't have to be 10%, but that's what I like to see. If it produces a similar result there, it's robust and it's not a fluke, and you're not fitting the strategy to this exact market condition, because the market condition here is different. You've now got robustness. So if you develop, and the way that I tend to do things is I try to develop things over a period of a year ago. Yeah, so this is 1 year ago, back however many years I want to go. And then I take the out of sample further back. And then what that allows me to do is once I've got that entire result from in sample and out of sample, I can then put it on the last 12 months from today until 12 months ago when this test ended. And if I get a similar result there, I've got in sample robustness, out of sample robustness, and forward testing robustness. Then it goes to live. That's the process. If it doesn't pass that and it doesn't pass that, that never happens. That way, you know you've got a strategy that isn't curve fit to the actual data that you're developing it on. And this is why most of the crap does not work in marketplace, in the MQL5 marketplace. All these EAs, this is why they don't last. People that build this crap are doing it just to sell you crap. They've not properly tested it. So it doesn't work. It's just the way it works. People don't know this stuff, though. This is the thing. Why would you? No one's ever told you. Less people is better. Whoever is serious, I think, will find the channel no problem. Yeah. More marketing, more idiots on the stream. Yeah. But this is why I'm doing 2 streams, Vitalik. The morning stream, idiots. The second part of the stream, clever people. Yeah. And if some of the idiots want to come into the clever people part, they'll soon realize they're an idiot and they won't come back. It doesn't matter, does it? It'll work. I hope. We are still coming out of summer trading. September is notoriously sketchy on stocks. October, November, December coming. Yeah. Again, these are things you can test. Yeah. So you can, in the back tester, go and test last September. Go and test the previous September. So test every September. If every September it doesn't work, and you can do all of this, I haven't got any tests in strategy quant. Yeah. So if you do all your testing in strategy quant, you can do a month analysis. You know, you can do a day analysis, you can do an hour analysis, and you can do a month analysis. If you find that every September is just no good over a period of 10 years, turn it off in September, because it's likely that this September isn't. If you find that 40% of Septembers are profitable and 60% aren't, that's that's do I or don't I territory. If you find that the last 2 Septembers haven't been profitable, but the last 8 before that were profitable, you don't turn it off in September. But you understand that this September might not be great. This is what backtesting is about. It's about analyzing edges over time to understand what is going to happen when you press that button. Because when you press the button and it suddenly goes and the P&L drops, you panic. But if you know that happened in the past, in the backtest, 5 times in 10 years, you know it's just part of the strategy and it will recover. You've got to have that data. You've got to have that analysis done to be able to understand it. I agree with you, sis. The return on marketing will most likely won't be worth it, as people would just buy the courses promising turning 100 to 100 into 10,000. Yeah, that's fine. Let them do it. I don't care. I reached a milestone in my trading yesterday. I reached the 150k on my main account. Good man. Education is very important. Good. Good job. One of my co-workers was talking about astrology with trading. We laughed about it, but he was serious. What do you think about it? You probably know the answer to that. Angel numbers, yeah. But then, if you think about it, Yusuf, it's a belief system, yeah? I'm not going to go down the religious route. I'm not a religious person, right? But I understand belief systems. So I'm going to put a belief system on the chart now. You'll know it. Yeah? This is a belief system. Because there is enough evidence to show you it happens. Yeah? And this is where mathematics and probability come into trading, which is why intelligent people, mathematicians, just get trading like that. Stupid people don't get it because they don't understand the maths behind making money. And it's very simple. Yeah. Every button press has a 50% probability of generating you profit. Really simple. Yeah. When you press the button is up to you. But you have to understand the probability of making money is 50%. It's either going to go up in the next X or go down in the next X. X can be an hour, a minute, a day, a month, a week, whatever you want it to be. A candlestick, it will either be bullish or it will be bearish, or it will be indecision. Indecision doesn't lose you money. Only one of the positive or negatives does. So the belief system in the astrology side of things is they have cycles of the moon, all sorts of stuff. And when the moon is there, it means I should go long. Why? Don't know. But I've done it 10 times and 7 of them, it worked. Well done. There's a 50% probability that it would work. So 5 of those 7 were just blind luck. The other 2 were part of the next cycle of 10, which is going to be roughly 50% of them going bullish or bearish. If you see something happening enough, you will believe in it. Religion. Yeah. No one can prove anything. No one can disprove anything. No one can prove why Fibonacci works. It just does. Sometimes roughly 50%. Sometimes it pulls back to 38. Sometimes it pulls back to 50, 61.8. We don't know which of them, but if you bracket that hair area and sell it more than 50% of the time, it will work. Why? Because the banks are selling, profit taking and adding to positions. That's the mechanics behind it. The mathematics behind it is also very mechanical, but the belief is in the Fibonacci ratio. And Fibonacci plays out everywhere. In nature, it plays out in trading, in mathematics. The Fibonacci ratios just work. Same as gravity. Why? Unless you're a scientist, you don't know. But it's just another belief system. And, you know, people have come to me with astrology, and Chinese people. I did a little bit of advertising a while ago, and I advertised to Eastern areas. I got a lot of Chinese people, and the amount of people that came with me number 7 strategies, because number 7's lucky. Unbelievable. The cycles of 7. I had all sorts of strategies thrown at me, and they all had a 7 in them. But it's because they'd seen it working X amount of time. But those are the people that, I'm not going to call them stupid, but the intelligence level is looking for something mystical rather than mathematical. But behind everything mystical is maths. And maths makes money. Yeah. An edge is mathematical. An edge in a casino is mathematical. Card counters, why do they make money, and why is it illegal? Not illegal, but frowned upon in Vegas? Because it makes money. Because it's just pure maths and risk-reward ratios. Fibonacci is a risk-reward ratio. It is a pullback ratio. It is a measurement ratio. Measured move trading. Yeah. What is a 1R? Breakout. It's a measured move. What is a 2R? It's a measured move. It's maths. You measure that and you measure that and that. And that gives you mathematical equation. What is this? Propulsion gap. It's a measured move of price over time. It's all to do with maths. Everything is to do with maths in trading. And all of these mythical things, like the astrology side of things in trading, all comes out of pure chance. Just you see something happen every now and again. Yeah. It's like the, you know, you see a black cat cross the road, it's bad luck. Or cross in front of you, it's bad luck. Why did that come about? Probably one person back in Victorian times saw a black cat and then got run over, and someone else saw that and went, oh, it was the black cat's fault. And they went, don't be stupid. They turned around, they saw another black cat. They turned around and a ladder fell on their head. And they're like, oh, it is to do with black cats. It's not. It just is coincidence. There was a black cat there twice. And there are thousands of black cats walking around all day long. Nobody else dies. But those 2 people that saw that believe in the black cat theory. Chance. It's random. And most of this is random because we're dealing with something random. The probabilities are this will either continue up to my target or it won't. That's the odds. I don't know what's going to happen. But if it's a full moon and that happens, I will believe that full moon makes my trades work. It's not, is it? But you can develop strategies on it. Absolutely fine. You can develop a strategy on anything. It's not, again, I keep saying it, it's not about the strategy, the reason you get in. It's about what happens after you get in. That's what makes you the money, isn't it? Out of sample back testing makes so much sense. Not it's a given. It's got to be there. It has to be in your methodology of backtesting. If you do not do out of sample testing, it will not work. It has a 50 chance of, again, I say it will not work. It has a chance of working, because if you do an in sample test and get something profitable and you don't do the out of sample test, there is a 50-50 chance that if you did do it, it worked or it didn't work. Yeah. So when you do your forward testing and it's profitable, you'll go, I don't need to do out of sample testing because it just works. No, if you'd have done it, you'd have found that you've actually got a good strategy. You just didn't do the testing. The odds were 50-50 whether or not the backtest would have worked out of sample. Maths, everything happens around maths in this industry. Why you have to be slightly clever to do it. Euro pound finally moving, yeah. Yeah, it's got to do some profit take, isn't it, before the next leg. So the run up on the FTSE this morning, do you think it was some bank institution placing large order? Yeah, the only way it works, Virginia. And is it possible to predict how much the pullback will be? No. Again, I've just read your comment, and that is exactly what I've just been talking about, isn't it? So let's measure what the pullback was. The move started here. The pullback was 38. But did the move start here? In which case, to the exact pip, it was a 38 retracement. Fibonacci, it works to the pip this time. And why did it work to the pip? Because I moved the Fibonacci from there to there. Curve fit. So I thought, oh, that's roughly 38. So I curve fit it to be exactly 38. I did that. Not the market. The only reason this thing moves is because of banks and institutions, yeah? So what you've said there, the FTSE went up this morning. Do you think it was some bank or institution placing orders? I don't think. I know. Unless you can prove to me another way this thing moves up that is not related to large institutions having enough money to buy a thing and move price in a direction, unless you have proof that that isn't how the market works, that's how the market works. But I don't need proof because I have somebody that used to work in a bank. So I know how this works because that is exactly what's happening. There are buyers, there are sellers. When these people buy, if the price of sellers is there, it will do that. If the price of sellers is there, it will do that. If the price of sellers is there, it will do that. Yeah. If the weight of buying overpowers the weight of selling, the candlestick will go up. There is nothing else happening in this market apart from volume of orders, long and short. Yeah. That's how it works. 100% guaranteed. The reason this has gone up is because banks have been placing orders to buy stocks in the Financial Times index. There is no question about it. It's a fact. So again, how do you predict the future? You get a time machine. Fact. This is why it's so difficult to do. And this is why everybody struggles. There is no system or strategy that works all the time. There is a system or strategy that works a percentage of the time. Maths, it's all about maths. Yeah, so this is a 38 retracement. It is either going to do that or it's going to do that, because that candlestick there was one of two things. Keep going on about this ratio today, but it's how it works. Yeah, this candlestick, this red one here, is caused by one of two things. One, the banks that placed the order to make that happen have taken a percentage of the order off. Two, the banks that placed that order have stopped placing that order. Therefore, the weight of sellers is now stronger than the weight of buyers. 100% guaranteed one of those two things has just happened this morning in central banks and institutions around the world. Which is going to happen next? Are the banks that placed that order going to now add more of the position to the order to make it go up? Or have they finished placing that order? And now the banks and institutions with the weight of sells are going to continue to drive price back down. because these guys have done the business for the day. Which of those is going to happen next? Now do you see how difficult it is to predict the future? One of those two things is going to happen. Which one? There is no one on the planet that can tell you, because no one on the planet has the information as to weight of orders in every central bank and institution trading right now on the Financial Times Share Index. Therefore, you cannot predict it. That is the facts that we're dealing with, yeah, as traders. And that is on every single instrument. This euro pound move this morning, is it going to continue? I don't know. What's the weight of buyers on the euro compared to the weight of buyers on the pound today? If people are buying more euro than pound today, this move will continue. I don't know. What I can tell you is I can enter and exit. That's it. So what your job is to study how this thing works and try and find things that you see happening again and again and again. That is an edge. That's what an edge is. An edge in the market is basically your identification of a condition that repeats itself on a regular basis with a percentage chance of happening that will produce alpha. You'll probably hear the terminology alpha used more than profit, because that's how banks and institutions talk about it. Generating alpha is generating revenue, which is generating profit. So when you get into a trade, if the probability of the trade going into profit is higher than not going into profit, that's an edge. The edge does not have to be a positive R. Again, it's a myth. Yeah, banks and institutions do not go like that. Banks and institutions go, when this happens, the probabilities of that happening are higher. The degree of movement after the probability has happened is a variable, an unknown. How far will it move? Unknown, because weight of orders will shift in the future and have never been the same as in the past. There is no two candlesticks the same on any chart ever. You can't predict it. You can see and identify things happening. A push, buyers entering an order, finishing that order, taking profit or being overwhelmed, attempting a second leg, being overwhelmed, continuation, M pattern, W pattern. This is a process in banks and institution of either completing or continuing an order. That's all we see on these charts, is the orders being processed. Yeah. But that point there, we do not know what is going to happen next. So every time you see that, either it will continue or it won't. You can control how much money you risk on that move. That's it. You have nothing else. Yeah. So, you know, and this is your decision, and this is why I don't believe 100% algorithmic trading for profit is profitable. Look at my stop loss, just got taken out there. Perfect, wasn't it? They took me out spot on. No, they didn't. The price just moved down. I got out because I was in profit. But what's going to happen now is it's either going to reach this area again where the sellers took control of the market and they will take control again, or the buyers who are entering their second leg here will overwhelm the sellers at that point. Which is it going to be? That's your choice. So all you've got is the ability to control risk at that point in time. And this is where backtesting comes in. If you see something happening, again, opening range breakout strategy, stock index hedge strategy, they are just edges which happen again and again and again and again and again in the market. Our job is to identify them, yeah, and use them. And there's billions of them. But you have to test them to make sure that there is a long-term profitability in them. And there's nothing that works. All these guys selling these courses, they will only show you the perfect examples of everything. I come in here every day and show you the shit, show you it going wrong every day so that you understand how to make money is not getting it right. It's getting in and getting out. You don't have control over this. This movement that we see every day in every instrument is totally out of your control and never repeats itself 2 days in a row. Yeah. Again, that's part of what I want to do in the members. Go and find me 2 charts with the same price action. It's like sending, when people join, get an apprentice into a builder company, yeah? And blokes, it's first day in, and he goes, right, come over here, mate. I need you to go and get me something from the shop. And he goes, yeah, what is it, mate? Okay. I need you to go and get me a long weight. He goes, all right, a long weight. Okay, runs off to the shop, goes up to the counter guy and says, I need a long weight. So the guy just turns around and walks off. An hour later, he's still standing there. He got exactly what he ordered, a long weight. Yeah. There you go, sorry, bad joke. But anyway, but you get the you get the idea. Yeah, it's just random. I'm going to send you off to find you a strategy that is picking 2 days with exactly the same price action every day. Yeah, none of you will come back with it. But what you will now understand is there is no such thing as a pattern that repeats itself consistently. Doesn't exist. Yeah, but I wonder if anyone's actually gone off and found a long weight. Morning, Roger. I'll be here for the free idiot sessions. Now, you're not all in. I'm not saying everybody that doesn't come to the membership is an idiot. No, Wayne, you're getting me wrong. I'm just saying it's the freebie hunters are the ones. But I don't know what I'm saying. Just playing devil's advocate. Not meaning to be rude, but I'd rather keep that money in my pocket. Yeah, keep it. It's fine. You don't need me necessarily, do you? A lot of people don't need guidance and stuff. You can learn stuff. So this is what I say. Everybody's got a level of intelligence where some people can just read a book, execute it, and blindly just do it. Some people can't, and it's an impossible thing to know until you do it. Yusuf, they call it GAN trading. Yeah, GAN trading. GAN, the guy that developed GAN, obviously Mr. GAN, and Mr. Fibonacci, there's all these people have developed these things which are just measuring stuff. They're things that give you an edge. Elliott wave works, but it doesn't work enough. And it has too many times when it doesn't work. So, it's just one of those things that you spend a lot of time trying to make work and trying to improve that don't have a chance of being improved because it's just what they are. The edge is just not there. So this is what backtesting is all about, is finding these potential edges and disproving them as fast as you can so that you don't spend time on them, because you will run around doing strategy development for the rest of your life. Otherwise, it's just terrible. You have to accept the probability of not knowing what's happening next and just take money when it's there. So your analysis has proved my belief that FTSE moves by program trades, not the underlying buys and sells. 80% of the volume is driven by algos. Yeah, so basically when banks and institutions place orders, they get a stack of orders to be placed. Yeah, so I sit on the commercial desk in Barclays. Okay, there's no paper involved anymore, obviously, but it's easier to say I get a load of paper delivered to my desk because that's visual. So I'm sitting at my desk, 8 o'clock in the morning. My boss comes along, dumps a load of paper on my desk like that, and goes, "Here you go. Here's your orders for the day." So I flick through all the orders, and I go, "Okay, so I need to execute 25 million long on FTSE stocks and 15 million short on DAX today." Okay, so 15 million long DAX FTSE, go. Okay, an algorithm then breaks that order up into multiple small parts, and when price is hit, it executes its order only at that price. So if there's 20,000 sellers at this price point, we will take those 20,000 sellers. They're gone. Then 20,000 more come along, we take them. 20,000 more come along, we take them. We sit there, there's no one else coming along, but there's 20,000 up here. So we move up and we take those 20,000. More come along, we take them. And we keep doing that. What I just described was a tick. This is why the market moves up and down. It ticks up and down. Every single price point has a value at it. You'll see this if you do any futures trading. You will see the CME feed, and it shows you every contract in the market. And that's how price moves. So I can't execute one order for 25 million long because there's not 25 million short that will take the opposite side of my order. So I have to break it down into small parts. What that creates is a movement like this, what we call market structure. I buy a load, I wait for a better price. I buy until no one else is selling. I wait for the sellers to come down. Then I buy all the sell orders. And I just do this over and over again. I'm an algorithm, obviously, a talking algorithm like AI. I'm Siri. How can I help you today? Make me money out the market. There are many courses we have found for you on Forex trading. That's the answer you'll get. So yeah, basically that's how it works. Very, very simple. But unless you can predict when the buyers will stop and when the sellers will stop, by that I mean banks and their algorithms, you ain't got hope in hell. But we can see when it starts, when the office opens. That's it. So yeah, that's how it works. Algos drive the market, but the algos are fighting the algos. So the thing is, you know, same as me. I'm sitting here, right? Am I trading now? No. Is my algo trading now? Yes. Yeah, my EAs are algos. Quants, they're called in banks. Same thing, isn't it? But that's all it is. So you haven't got any way of predicting what the next candlestick will be because you don't know what the volume will be in the next candlestick. And this is where all these courses on futures trading are trying to get you in by showing you what's inside each candlestick, showing you the volume profile, showing you time and sales data. But everything that you see is historical. None of it is future. So you can identify a pattern where an algorithm is trading. So today there is a pattern, very clear. The algo is buying the FTSE. It's buying the FTSE. So you're now going, I've identified a buy pattern or buy cycle as they're called in the FTSE. So what are you going to do? Wait for it to pull back and you're going to buy it. But what if that is the end of the buy cycle? You've missed it. So when you buy it, it comes down and you're like, why does trading never work? Why is it every time I buy it, it goes the other way? Because by the time you've identified the buy cycle, you've missed the buy cycle. The sell cycle's starting. What we try and do is identify when the buy cycle is over. As mean reversion traders, we're trying to get on their profit take or pullback move. And if we're lucky, we pick the high of the sell cycle or buy cycle, vice versa. And that will typically end like that because the sell cycle will overpower the buy cycle, bicycle, and it will come down. This is why we look for market reversal alerts. That's why I developed the indicator, because this pattern happens all the time, everywhere. You will see it everywhere you look. It's not, I didn't develop the indicator to make money. I developed it because it clearly identifies the beginning and ending of buy cycles and sell cycles in market movement. However, the probability every time there's a reversal alert of that cycle continuing is the same. I have no idea what's coming next. So you add in additional criteria to say if there has been a massive sell cycle and we see a reversal alert, the probabilities are higher because sell cycles will only be sustained for a period of time. However much ordering is needing to be done. When the ordering is finished, the profit take move will commence. The M pattern will reverse. We don't know which of these is the one that will be, which is why everybody moans about my indicator saying gives too many false signals. Yes, 50% of them are false because it has no idea what the volume of orders is for the next hour. Well, it's no use then, is it? No, that's because you don't understand the probabilities of trading. It's bloody good. It does exactly what it says on the tin. You just don't understand how to use it. What you're doing is placing a stop loss there and expecting to get more than a 50% strike rate. That ain't going to happen. And I've never produced any content that says it would, because it doesn't. Yeah, and that's the frustration of trading. So there you go. So Wayne, I have proved you right. You have proved yourself right. 18 likes, 54 watching. That's not good enough. Where's John? Here he is. Hit the button. Vasali. Thank you very much. $49.99. I will be the first one. Here is my monthly payment. Thank you very much, Vitaly. However, I haven't launched it yet. And I don't take the payment. YouTube does. But thank you very much for the tip. That is very much appreciated. If I had a way of adding you in to the monthly thing that I'm going to start at some point soon for free, I would do. But I don't think I have that availability. But thank you very much. That is very much appreciated. I think that is probably the biggest tip I've ever had. So thank you for that. That actually buys me something useful for the new system that I'm about to set up on the website to take payments. That's just cost me $99. So I think you've just paid for half of my new payment system for being able to deliver my products in a better way. Thank you for that. Very much appreciated. That is basically the largest tip I've ever had. I'm happy now. I'm smiling. But hopefully you've made that money back in the FTSE this morning by taking the SIH or the opening range breakout, and you're about to hit 5R. So, doesn't matter. There's a drop in the ocean, isn't it? Really? Anyway, thank you for that. Very much appreciated. When does the paid membership start? I haven't. I've got to set it up. I'm planning on doing it possibly next week. I need to get stuff set up on the website first of all. So I need to set up a system where people can communicate to me on the website. It's probably just going to be a form. So what do you want to talk about? Type of thing. Obviously that will come out in chat as well. But I also have other things that I need to set up. I've got to put a schedule together for it as well. Because I don't want it to be random crap. I want it to be scheduled so that you know what is coming. When you know what's coming, you'll know if it's of interest. And I want feedback on it to say, that's a load of rubbish. We don't need to know that. We know all of this. Because I don't know what everybody knows. So, so that's basically what I need to do. I need to get all of that together. Which is going to take me a little bit of time. But if I can start it on Monday, I will do. And obviously, I will need to set it all up on YouTube, which I've pretty much done. I just need to press the button, and then they need to authorize it for some reason. I don't quite know why it has to be authorized. So, yeah. But it'll be soon. But I'm not going to stop these 8 o'clock ones either. It's just that now we're at 9:08. I'll be saying goodbye. I've got to go off and deal with the private guys. We'll get some stuff done. So these sessions will not be like this. They will be much more structured in the fact that we'll be looking at strategies that are already in existence, how they're playing out, what to do. And there'll be some of this stuff in there, analysis of FX, all that sort of thing. But what I've just gone on about there, I won't be talking about that stuff because I need to get through this first. And any time I have left at the end will be general chat stuff. So, you know, this thing's, you know, with analysis, as you know, I come in here some days, I go, there's no ADRs today, there's no weekly ranges, the RSI dashboard's flat. We'll have a quick whiz through every pair. We'll see if there's any opportunities for maybe support, resistance, bounce trades, stuff like that. Have a look at the fundamentals, and the stream will be over in 20 minutes because there's nothing to do. Other days, I'll come in here, we'll have had ADRs all over the place, weekly ranges, the RSI dashboards are lit up like a Christmas tree, and the stream might last for a full hour just looking through pairs. And doing analysis. So that's the kind of format that's going to take. And then I'll be obviously in the 8 o'clock session going, this is what we're covering this week in the 9 o'clock sessions and for members. And if you're interested in it, you can join. If you're not interested in it, you don't have to. This is the thing. I want to give people what they want. And I don't know what you want. Everybody's at a different level. Some people don't understand what I just explained. Some people do. They're not going to need, they don't need that, do they? Yeah. If you've been around for 10 years in trading and you fully understand the mechanisms of market movement, you won't be it, will you? So, but this is the stuff I will put content together on to deliver. And I will do it probably once or twice a month. So I want to put together a cycle of classes. So there'll be something happening Monday, Tuesday, Wednesday, Thursday, Friday that week. The next week, something different Monday, Tuesday, Wednesday, Thursday, Friday. Then the next week, possibly something different Monday, Tuesday, Wednesday, Thursday, Friday. And then we'll go back to the beginning of the cycle where we'll have that content start again on week 4. But I build it out as we go. So if you get, and I'm a firm believer in having things drummed and drilled into your head. If you watch it once, you get a moment. If you watch it twice, you get a light bulb moment. If you watch it 3 times and you've executed something based on that, it's ingrained in your head. Yeah. So the next time you see that happening and you take a trade short and it works out, you will understand what I've just explained to you and see what the bank was doing, and it's in there and it's never going to leave. But you need to be told it multiple times to get it into your brain. It's like courses. First time you watch a course, you get all excited. The second time you watch a course, you pick up stuff. Same with films, isn't it? I watched a film the other day I'd seen multiple times. Yeah, Beetlejuice. Because we were going to go and see Beetlejuice 2. And as I was watching Beetlejuice, having watched it so many times, I was like, I never noticed that. Because I knew what was going on everywhere else, and my focus was on a different part of the film at that time. And I was like, never seen that, have you? Look, that's a throwback to da-da-da-da. But that's only because I've watched it multiple times, and I hadn't picked that up. And it's something important. So that's what happens with it. And that's what I want to do with the daily streams, is to teach you price action. Explain the workings of a candlestick, exactly what each candlestick means. We'll look at charts and go, what does that mean? What does it mean right now? This is going to happen or that's going to happen. And then we'll do something else. And then we'll come back to it and we'll do it again. And then we'll come back to it and we'll do it again. And if you stay in for 3 months or something, you'll get that content delivered to you 4 or 5 times. And I'm only going to teach important stuff that I deem important. Yeah. If it isn't related to something that you can generate a strategy out of with an edge, there's no point in talking about it, is there? I'm not going to be talking about moving averages. We might do a little indicators. It will be part of a day I've got planned, which is basically why indicators don't work. Yeah. And one of the focus points is going to be this thing. Yeah. Let's go over to a daily chart. Yeah. I've explained it many times before. Why is this thing so useless? Because it's showing you the average price for the last 72 days. What the hell has that got to do with tomorrow? Nothing. I don't care where it's been for the last 72 days. Because today, it's doing something different. It's nothing, no use to me whatsoever. Yeah. That's why trend trading doesn't work. Trend trading is the worst possible system out there. It is profitable, but it's got so many downfalls in it that most people can't do it because they haven't got the patience. Yeah. If you're waiting for something that on average for the last 70 days has been doing something to happen again, you don't expect to get out of that in less than 70 to 140 days. Because if you're using a bounce on a moving average and price has taken 72 days to get back to it, how long is that trade going to last? If it works. And what's the probability of that? But the probability of it going into profit is 50%. The probability of it hitting your target is below 30. Trend trading. People talk about trend trading, and you can get the entry very well, very good on a trend trade. But the probability of it actually getting to your target is minute. Again, backtesting will show you all of this. But it doesn't work. It does work long term. You know, I can show you this chart and I can show you many, many examples of trades where if you'd have taken a 72 bounce, you'd have made a killing. Yeah. So that one there is a great example. Look, let's look at that one in detail. Which one was it? That one. Yeah, so price basically pushed down below the 24.72 monthly, quarterly moving averages, and it pulled back into the shadow, as I call it here. And if you'd have shorted it there, unfortunately, you would have been stopped out. But if you'd have shorted it when it broke that low after coming back out from that bounce off of the 72 moving average, you'd have had an entry there. Your stop loss would have been there. And your target, obviously, it has to be more than 1R to make money. So let's say you go with 1.5, a very, very small target. It's there, and you hit it. It took you 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. So it only took 2.5 weeks for that 1.5R trade to happen. But in trend trading, what does every course teach you? We're not in it for the little 1, 2, 3 R's. We're going for the 10, the 15s. Good luck with that. So if that is 1.5, let's say, let's call that roughly, let's call it 2, 4, 6, let's go 8. Let's be conservative and not go for the 10R. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months. Well done on your one trade of the year that made you 10R. Unless you've got a massive amount of money and balls of steel to sit through that 2-week retracement that turned into a 1-month accumulation, and then the next 3 weeks it went your way, but then pulled back against you for a month and a half and removed over 50% of your profit, then pushed down for 2 months and still was nowhere near your target, and you cannot hold that. Sorry, but unless you are Warren Buffett, there is no person on the planet that is sitting through that trade on any time frame trying to hold it for anything more than 2 to 3R. You will crap yourself. Doesn't work. That's the sort of stuff I want to show people, because they're going to come to me. I know people are going to come to me with many, many trend trading strategies, because on paper that works. Analyze the results. Look at the hold time. My question will be, fantastic strategy. You got a winner there. Are you comfortable sitting there for 3.5 months holding it? Yes. Excellent. How are you going to pay the mortgage for those 3.5 months? Doesn't work, does it? It does work, but it's suited for investment traders that want to pay for a holiday. It's not suited to somebody that wants to do this as a job. That ain't going to happen. Yeah, you've got to understand all of that stuff. It's very important. I'm trading PTA on the daily with discretionary entries. The ADR calculations, risk, stop loss, TP will be consistent regardless of the time frame. Yeah, so ADR obviously is ADR. Its time frame doesn't affect the average daily range of movement. So basically we're measuring the daily range. That is it. Yeah, so intraday, it goes up and down within that range. We're looking at what is on average the movement up and down over the last 10 days. That changes on a regular basis. I just happen to have a little piece of research that I'm going to share with you that I was going to do in the private bit, but I'll give you a little glimpse of it now. This is a new ADR research I've just completed. Yeah, measuring ADR 1 to 240. So I'm basically measuring the ADR from a day all the way up to a year. Yeah. So just to demonstrate how much ADR changes, basically. So let's take off those. Yeah. So on this chart here, we have ADR 10, which is the one that I use, ADR 60 and ADR 240. So ADR 10, yeah, and this is important. And the reason I'm doing this research is I'm thinking of switching H1M5 to a completely different ADR. And the reason why is, look at the difference, yeah. If you took a position trade on that day, you were scaling in 75 pips apart. Okay, so you take your trade, your risk is based on 75 pips of movement. By the time you get out of the trade, your ADR spacing is based on 140 pips of movement. Twice as much. Yeah. So you know when we say get in and then get out half an ADR apart, EAs are doing a daily calculation on ADR. So when you start the position, you're using 75 pips to do your calculation. So if you're getting in half an ADR apart, you're getting in at something like 37 pips. But 3 weeks later, you're still in that trade. Now you're scaling in at 70 pips per entry. So what's happening is your trade is expanding out. The distance between entries in your trade is getting bigger and bigger and bigger and bigger. This causes a problem if you get an accumulation and then a pullback. Because you've spaced too far apart, the distance to get to break even is further away. Yeah. So I'm looking at reducing the distance that I use for each entry moving forward and using a much higher average daily range to do this calculation. Not because I'm interested in a smoother, well, I am interested in a smoother ADR figure, but because in squeezes or positions that you hold for a month, you can 2x the distances that you hold for 2 months on. So if you use instead a higher ADR of 60, for example, so this is 60 last 3 months worth of trading days, 20 trading days, roughly a month. When you get in on that first trade, by the time you get out of that trade, yeah, that is the difference. So you're going from 75 to 85. That's 10 pips. Yeah, that's 10% variance instead of 100% variance. That will make a massive difference to the distances between your entries within your position, but more importantly, the number of positions. So you would be in a lot more positions if you used a higher ADR, but also your average would be much closer. So I'm going to run some tests on this because I believe that what I'm going to find is that the drawdown will increase, but the time of trade and the profitability will increase as well. So, sorry, the time in trade will decrease and the profitability will increase because your average will be closer, giving you a higher profit exit quicker. This one is 240, so the last year's worth of ADR. That isn't quite, sorry, that's, yeah, 60 I'm using there. So that isn't quite dynamic enough, I don't think, to measure current price movement and current market regime. So if we put the 1 ADR, this is the actual range it moved every day. You see the variances, yeah? So we had a day there where it moved nearly 300 pips. We had a day there where it moved 250 pips, but the average is down here. Yeah. So this is the euro US dollar. So virtually, like, take out that spike, that spike. So we're looking to remove the outliers. So in this period, which is 3 years, 2.5, something like that, we've got 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days roughly in 3 whole years where it went way, way, way bigger than the kind of average. Yeah. So you can see that using a ADR which is smaller on low time frame trades and high time frame trades can have actually a detrimental effect. So I'm thinking maybe it's time to switch up to higher ADR numbers. Again, all this needs to be tested. Very easy to do. You just change the number in the EA and it's done. Simples. But I need to verify the research and, again, do a load of back testing on it. So something quite important, I think, and will be not so much a light bulb moment, but something that could very, very easily speed up the time to exit in positions. And one other thing you've got to be very aware of when you're doing back testing is number of trades. Every trade we take is a potential reward. Yeah. So if you have a strategy that gets into 3 squeezes a year, yeah, during those squeezes, your ability to make money is removed because you're waiting for the trades to play out before you can take a next opportunity. If you can get out of these trades faster by exiting quicker and spacing closer, you will take more heat over a short period of time, but your opportunity to make money is increased exponentially, doubled. Yeah, and some of the very, very early tests I've done on this are proving that fact. So there's potential for making a lot more money. You know, this is the type of research I really need to get help with, because this is one pair. This piece of research that I did here took me 2 hours. Yeah, there's 28 Forex pairs. Yeah, there's a week's work here just to prove this point. But if we prove this point and it makes everybody massively profitable, you guys can help, and I can basically give you an EA to do this. We've got the EA built. We'll put the research together. But all that sort of stuff is definitive in making profitable strategies. So, you know, sharing that knowledge. You guys come to me with a strategy and go, I've got this strategy, looks okay. Well, why don't you, instead of using 20 pips, switch that to using ADR? Shit, now it makes money. Brilliant. We can all benefit from that, can't we? It's going to be amazing. Vitali, don't worry about it. You're very welcome. Thank you very much. Again, for the $49. Very much appreciated. I did make some shorting odd. All good. Can't trade CFDs. Why can't you trade CFDs? Who can't trade CFDs? Everybody can trade CFDs, can't they? Or can you not trade them in the US? Are you in the US? Stalling out on the FTSE. Last 20 minutes, dead. DAX targets today. That looks pretty much where I would want to get out. United States, you can't trade CFDs. Yeah, see, that's a problem. What can you trade then? What do you trade in the US then if you don't trade that? Is it just futures? It's very difficult to trade in the US, isn't it? This is the problem. Scalping strategies, I guess, isn't it? Forex and futures, but Forex is CFDs. Or is it spot Forex? You're trading spot Forex, I guess, are you? It's the same thing though. I mean, like, spot Forex charts will mimic CFD. Well, rather CFDs mimic spot. So what we trade, what most of the world trades, contract for difference, is basically mimicking what is happening in the futures markets. So, you know, this DAX here I'm trading on the FTSE, this is the futures market for the financial share index. But the price action, if you open up spot or open up the actual index itself, the futures index, it's exactly the same price action. You will see exactly the same candlesticks painted. There's a minimal variance to do with spread from your broker and quotes and stuff. But overall, if there's a whacking great bearish engulfing and a 3-bar reversal pattern on CFD, there is one in your market as well. Yeah, price is price. Price is quoted different. You'll have a different number, which is why I always say don't look at the numbers. Yeah, I will always say, you know, that's where my TP is here. Why? Because of that. The number here in this column is irrelevant. It's got nothing to do with it. It might be a big round number, it might be a half round number, it might be a quarter, it might be something that is a significant number. But I don't care about whether it's a significant number. I care about what happened at that level. So it doesn't matter what you're trading, it matters what you see. We can only see where the banks have been. We can't see where they're going. So we have an edge in the fact that we know where they've been. Last time they were there, they couldn't do that. So there's a higher probability that they won't be able to do it this time. There's a 50-50 chance it will go up or down, but the probability of it bouncing there and actually getting a decent enough movement to make money on is better than if you just press the button here. Always, always, always was told, never trade from the middle of a range. Yeah, because middle of a range, you have a 50-50 chance of price going up or down. The extremes of a range, you have a 50-50 chance of price going up or down. Yeah, but at the extremes of a range, if price goes down, you have a much higher probability of that move being further and longer than if you take a trade here, because it could just accumulate and do this. But here, if there is weight of sales, it will be fast. You'll be in, you'll be out, you'll be done very quickly with force. So, you know, this is why the vast majority of traders are mean reversion traders. Bollinger Band traders are waiting for that, to get that. They're not waiting for it to hit the midline and then go long or short. You're waiting for the extreme to be met because you know the force of the pullback will be strong. This FTSE's off today. Look at that. ADR today is yesterday's high. So if you're holding, well done. I'm not, because I got taken out on that, unfortunately. Look at that. Couldn't make it up, could you? The only bear candle we've had the entire session is the one that took my stop. There's only been one. But that bear candle was 168, 16 pips. Nothing I can do about that. Everybody be out on that with any kind of trading stop, wouldn't they? 19.99 is a good price to get a nice size of serious traders into the mentorship. Yeah, membership. Scammers and wasters will last 1 month maximum at that price. Yeah, I don't know what control I've got over people basically in a paid thing. So this is all very much a trial type thing. So if it works, it's great. If it doesn't work, fine. What I don't want to do is be sitting here waffling to nobody. Yeah, if that happens, it obviously won't happen anymore. But I will still do them, I think, because I will still deliver the content, because you can watch the content. You don't have to be in the room. You can watch the replays. So many people watch the replays. I've actually got a higher replay watch than I have a live watch. There's 48 of you in here now. This will have about 200 views, 250 views this stream. 250 people. So there's a live view, and then there's the rewatchers. There's more rewatchers. So even if there's only like one person in the room, it'll be awkward because it'll be like, hi. So I'm going to talk about this today. Are you there? Which is why I want content, so I can just go. Any questions? Nope. Nobody here. That's fine. I'm off. Bye. Problem with futures here, though, brokers force 1 lot increments. Yet, this is the problem with futures. Futures are restrictive on risk. They are a problem, which is why a lot of people trade micros. So you can trade obviously 1 lot increments only, but you can trade the E-mini or the main indexes. So there's ways to scale your risk by trading the smaller instrument, but the smaller instrument can be a little bit more volatile, I find, as well. You don't get the same price quotes on them either. So, but it's the same as anything. All trading is about risk management. Yeah, how you manage risk is your job. You are a risk manager, and how you do it, on what time frame you do it on, is entirely up to you. And how, with me, I'm a position trader, and this is the mismatch that people get. People come into the live rooms and they see this and they go, "You idiot. You're letting your losers run. You're adding to losing trades." They don't understand what I'm doing. I'm managing risk. Yeah. My risk at the moment is 2.76%. This does not differ from you, the person that comes in and ridicules me for trading in this way. I'm not saying anybody, I'm just saying the person. Than him taking 3 trades at 1% risk today. You are risking 3%. I am risking 3%. The difference is I will hold my trades for a long period of time during that risk, and you will be out today 3 times because you were wrong. I am still managing risk. When that risk gets too high, I will shut it at 7%. You lost 7% because you added to your losers. You, Mr. 1% risker, who risks a stop loss at 1% every day, will have a losing run of 7 trades in a row. How is it different? It's not. You lost 7% of your account. I lost 7% of my account. I gave my trades an opportunity to prove me right. You got hit 5 times in one day. Who's the better trader? The person that lets the market work, or the person that tries to pick the top and the bottom of every move? You ain't going to do it. You will do it for a period of time. You will have a period where you were walking on water and you are God, and you will go, I'm setting up a signal service. I'm the best thing since sliced bread. And then it will all go wrong. Yeah, this is why all these courses you see come and go so fast, because they get something, they work it for 2 months, and they're like, this is it. I found it. Hey, everybody. Oh, it stopped. Market conditions changed. Sound familiar? So, yeah, if you, as long as you can trade an instrument that is the same, the theories, the methodologies that I teach and have always taught and will always trade are the same. It's price movement. Price moves up and down. It doesn't matter which instrument you're trading, what you're trading on. You're more restricted in the US to do things in certain ways. But at the end of the day, this move here is caused by a thing that happens regularly, which is a scale in and scale out of a movement. And that will continue on every platform, in every instrument, regardless of where you are in the world. So, you know, this is, it's not, it doesn't matter whether you can trade CFDs or not, really. It's more about identifying it. Beautiful reversal alert. Look at that. At that point there, it could have done that. And I had no idea it would do this today. But you just get in and you do it, don't you? So that's really all today. Not a lot else to discuss, really. Midweek stuff is starting to mean revert, which is good. I'll be making some profit today, doing some DD control, hopefully getting out some stuff. Got 1.67% to make back this week. Forex is just fine. I do position trading. Futures, I am forward testing ORB. Yeah. I might go back to ORB. And I might do a lot more work on, again, in the live rooms, I might do a lot more work on the opening range breakout strategy. But maybe working on volume. The thing that concerns me about volume is obviously it is different for everybody. So it's not the best unless you're trading futures, and obviously then you all have the same volume. So it's maybe better suited to that. But the price action will tell you what's going on, because if there's high volume breakout, the price action will tell you there's a breakout anyway. You just missed the volume element. But we're trading candlestick patterns at the end of the day, and all EAs are working on candlestick pattern recognition. So we got some wicks forming on the euro pound. So it might be getting ready for a little bit of a pullback here. It might be time to do some DD control. We're approaching ADR. Yeah, I think I might get out of the aggressive. I will be getting back in on the next pullback and long. Again, anyway. So what's that? 2.5. I'm closing out 50% of. Oh my God, I'll close out 50% of the top one just because I can click on it. Okay, so DD control done. So that's the first entry. Just reduce that by 50% using the profit from this one. We are in propulsion. There is a chance of that happening. I don't know, but there is a chance. So the probability is we're almost at the average daily range. Price is starting to get exhausted at an area where we could potentially see more sellers enter the market. So it makes sense to get out there. If it continues, it continues. If it pulls back, the next long is entered, and I will get in on the next market structure pullback leg up if it comes. If it doesn't, we're still in drawdown. So but that's done anyway. So 1.7 banked. Still got a lot of profit actually. I might reduce more on that because I'm at break even for the week. So I might reduce some of this down as well if I could click on the order. Got it. I'm just going to take, I'll take one off that. I've got 1.6 running. So that will be $500 odd. So that gives me 1.1 on the day, reduces drawdown, reduces lot size. So risk reduced basically. And then we'll get more on if it pulls back and pushes. Don't like the speed this one's moved at. You know, that, forget that move. I mean, that was just weird parabolic 2-day. That was almost like somebody accidentally pressed the wrong button in a brokerage. It's just weird, that move. Wasn't, but it's just there wasn't really any reason for that, was there? Any news? So that kind of movement is potentially what I'm worried about continuing. We are getting a decent pullback. So if we're going to continue structured down, which there is a possibility of, I just want less on up here so that it gives me an easier opportunity to get out back down here. So I'm hoping what's going to happen is we're going to hit propulsion, pull back, put in a higher low, and then we're going to come back up and test that propulsion, in which case then I'll have another order on, average will move down, and I will get out at this level here. So that's the plan. We'll see what happens. Right, I'll be back tomorrow morning, same time, 8 o'clock. And I will be getting stuff done on the website. Plan moving forward for products. I'm going to leave all the indicators on the marketplace. I'm going to move sales of all EAs onto my website, and I'm going to handle licensing for all EAs myself. The indicators are less important to me than the EAs, because the EAs are what makes the money. The EAs are what does the back testing, the strategy development, and everything else. So I'm not going to bother with any more indicator development, full stop. If I want to build an indicator to give me some information, I'm going to build an EA to do it. Because if I build an indicator, it's no use to me unless I can back test it. So why not just build the EA around the indicator itself and use that? Doesn't make any sense to me to develop indicators anymore. So what I'm going to do is any new products that come out, if I'm going to use new products for new strategies, they're going to be EAs. I'm not going to do any indicator development at all, because I'm not interested in manual trading in any way, shape or form, because it's too time restrictive. And especially if you want to run 10 strategies, you're just not going to be able to do it. It's got to be done. It's got to be automated. So the automation part obviously is the strategy analysis and identification of an entry point and the entry. Then the all EAs will manage that. But when I'm in a trade, I can then eyeball it and see what should be done with it, if anything. So I want to take full control of all the EA development back to me so that I can have version numbers of EAs, because what I want to do is release different versions of EAs with different functionality that people may not want. So by having a licensing system that works on account numbers, you can buy a license for your account. If you've got 3 accounts, you can buy 3 licenses. But if there's an update to the EA, the problem with the MQL5 marketplace, as people have found out, is if you update the EA, it resets everything. Yeah. So when I push out an update for the position trader EA, and you have it running on a VPS, when you press the update button, it updates the EA on your VPS. It resets everything. That's no good. So I will release version 2.5 of something. And if you're running on 2.4, you don't have to get 2.5 unless you want it. It's like an Apple iPhone. Yeah, iPhone 10, fantastic. It's got everything I need. iPhone 11 comes out. It's got a bigger camera. I don't really take photos on this because I'm a photographer. You don't buy it. You keep this. Yeah, I can't control that at the moment because if I update something on the marketplace, you get a ping that says, here's an update, and you just do it. And it breaks things that you have running. So that's the reason I want to do that. And also with anything that I may develop in the future that is indicator based, if I have an EA version rather than an indicator version, the only restriction is you can't put more than one EA on one chart. Not really a problem, because if it's an indicator, I can build more indicators into one EA. Yeah, that's what a strategy is. So that's where I'm going to go moving forward, because I just don't see the point in doing indicator development anymore. So what's out there is out there. That's great. But anything I do in the future based on ADR, and I've got a lot more enhancements I want to make to ADR strategy, I will build an EA specific for ADR trading, and it will have ADR built in. So if you're trading any strategy based on average daily range movement, the ADR EA will allow you to trade multiple variations of ADR strategies, and it will have the ADR indicator there. So you don't need an indicator because it's built into the EA. And if you want to use an EA for manual trading, you can do. Auto trading will be able to be turned off, and you can just get in manually. Yeah. Or you can have the EA automatically take entries for you. Yeah. So that's what I'm doing moving forward. So I'm restructuring everything I do on the site at the moment to reflect that. So I'm going to build out new pages, which are going to be EAs purchased through the website. And that way I can control everybody better and update people better on what's going on as well. So, if there's an update, you'll get an email from me saying, I've updated this. When you update it, this is what will happen. Yeah, rather than just blindly doing it. Someone's contacted me saying, they updated the position trader EA and it did a second round of drawdown control because when they updated it, it reinitialized the EA. On the initialization, it does what it's told to do. And part of that is, are we in drawdown? Yes, do drawdown control. So it doubled the loss on his account because there was an update. That can't happen. It's a very bad system. I'm finding out all sorts of stuff. I'm not very happy with MQL5, with the way that it works and operates at the minute. Nothing wrong with the terminals, MetaTrader 4, MetaTrader 5, but the marketplace is so restrictive in what you can do with it. And also they've got all sorts of weird and wonderful rules, which makes it very difficult to get products up there as well. It's got to jump through a lot of hoops that you just don't need to jump through, which, security wise, it's fine. I build in, there's the other thing you can have confidence in. I use all my products. Yeah. I build in a lot of back end stuff that will stop it doing stupid stuff. So, because obviously if I'm sticking it on my accounts, I don't want it being stupid. It's only as clever as the person that's programming it. And thankfully, I'm not a dumb person. I hope. But anyway, so yeah. So I just wanted to update you on that as well, because that's what I'm doing this week is loads of work on the website to get all that system set up so I can make it more flexible for people. Right. I will leave it there. Anything you need, I'll be back tomorrow morning. I will be in Discord and Telegram as usual. I also need to set up the Discord channel for the private group type thing, or the membership. I don't even know what to call it. Whatever it is, it's going to be on YouTube. I need to set up a group for that is specific to what we're doing in that group, which you can or don't have to participate in. But I need to figure out a way of setting that up and controlling that as well. Yeah, I don't really know how to do it, so I kind of need to do a load of Googling or AIing. Right, anything you need, let me know. Otherwise, I will see you guys next time. Have a good day, and good luck with the markets today. Hopefully they push and we carry on. All right, I'll see you next time.